really, if it's a GP that's raising a series of funds, it's already been in the market for many years before, and let's say is raising fund number 5, then the obvious place to start is simply to look at the performance of previous funds. Because when an investor is putting money to work with a manager, they want to make sure that the skill set that they have, the strategy that they've deployed, the returns that they've generated are repeatable for the next fund. So that's the easiest decision, where there's been no change. They satisfy themselves that the opportunity is still there today, that the team is still motivated, that the team are still working well together, that the manager is able to continue to manage third party capital and able to do business as usual, and therefore with a relatively high degree of certain, it knows that the next fund should perform well because the previous funds have done. But of course, life is not like that, and things get in the way, and usually that is exactly the challenge which GPs have, and where we work with them. GPs tend to appoint advisors when they have difficulty raising money, right? Not if they're raising money is easy, then they don't need support. But if you're a very established GP where you raised multiple funds in the past, you have an existing LP base, and all you've got to do is go to those same investors and say, can you re-up into the next fund? It's relatively more straightforward compared to a GP which either is raising money for the first time or has had some sort of problem previously, like they've had a team departure, they've had to change their strategy for one reason or another, they've had changes in their LP base because LPs also just changes. Things happen there where they go out of business or they decide to stop investing, and therefore the GP needs to go out to find new investors to replace them. And these are more situations where we then get involved.